Hey everyone, and welcome to Earnings Cheat Sheet for Friday, December 5th. It's Alexis Garcia and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. So, Ed, earnings season wrapping up here a little bit, but there's still a handful of companies of interest to growth investors. So, what do you have on tap for us today?
Yeah, I want to take a look at Broadcom, which obviously has been a leader, Oracle, and Toll Brothers, a luxury home builder.
All right. Well, let's start with Broadcom, which is scheduled to announce fiscal Q4 earnings on Thursday, December 11th. Earnings for the chip maker are projected to jump 39% to 675 per share, and revenue is seen rising 23% to $63.34 billion. And here's what we're watching Broadcom. We'll be looking for commentary about AI demand, especially demand for custom AI chips. And Ed, Broadcom shares got a boost in September after the company said it had won a $10 billion order contract from a new customer. That should hopefully improve its AI sales outlook. The customer is widely rumored to be a ChatGPT maker, OpenAI. So, talk to me about Broadcom and what's on your radar.
Yeah, and Broadcom got another boost, and we'll talk about that later. But it's like recently because of its connection to Google, because it helps makes the chips to make Google AI chips. So that's a big factor there. Broadcom the growth is supposed to accelerate for EPS, and it would be the second straight quarter of accelerating growth on revenue. So seeing that pick up for a while, the growth wasn't that tremendous, and the stock was going up and up and up because people were anticipating faster growth. It's coming in. So just want to see that how that's going and just that kind of momentum where where how they're seeing it, not just for the next quarter, but further out. How are they seeing that custom AI outlook? Presumably they're bullish, but will they convince everybody else that people should be even more bullish about their direction as opposed to the more raw power NVIDIA AMD GPUs that had dominated until fairly recently?
All right, Ed. Well, let's go ahead and take a look at the chart because it appears Broadcom is trading just above a buy zone here. I guess we could look at this cup with handle base that formed. Also, this 374 area seems to be potential area that investors could have gotten into. But talk to me about the chart. We saw a nice week of gains last week for Broadcom, and it just seems like maybe the stock is trying to hold on to that.
Yeah, and I think that, I mean, technically it's around a buy zone, but I don't think anybody wants to do anything with this ahead of earnings. This is going to move a lot on earnings. I mean, presumably, and it's been more positive, but it could certainly be negative if expectations are probably pretty high for this name, given that big boost, earnings in that customer and the Google tailwind recently. But if it pulled back to the 21-day line and then moved off of that, that's right around that level, the top of the prior base. If it didn't go crazy, you could see it moving off of that. I think that might provide an entry after earnings. If it gaps up, then you can buy the gap up, but you often you could also just wait a while and see if it pauses and it holds those gains. But definitely very important to watch because this will be very important for a lot of other AI chip and AI names as well. One of the last reports, that's before probably for another month, honestly.
Yeah, and when we look at these fundamentals, I mean, solid EPS rating, a perfect 99 out of 99, accumulation distribution rating, a B, nice composite rating. I mean, everything is looking pretty good here. Ed, I'm going to switch over to the weekly, and we can just see just these strong double digit EPS growth, double digit sales growth. Um, so again, talk to me about the fundamentals because it sounds like investors have maybe priced some of this growth in. So how much room does Broadcom have to run?
I think that's always the question with these things. Like Nvidia had strong growth and strong guidance, and stock reversed lower, and that triggered a big sell off in the market because Nvidia is so important. So you don't know. I mean, that's the thing. It's always an expectations game. The numbers are going to be strong. I mean, I suppose they could miss, but it's going to be solid growth. It's going to be a solid outlook. It's just a question about how that meets up versus expectations. But this has been doing very, very well. It rebounded. I think what's important is like last week, it rebounded quickly back above the 50-day, 10-week line. I mean, it wasn't, yeah, it did go under, but a lot, it was one of the quick ones to come back. So yeah, I think this one looks like it has a strong runway of growth for the foreseeable future. And I think that's the thing they're going to look at. It's like, well, a year out, 2 years out, or they just see this huge market for their business or not.
Yeah, and I mean, not only did it come back, after last week's trading, but it closed, at the top of that
Yeah.
trading range, Ed, and, yeah, it would just be, interesting to see, if it can tighten up a little bit here, hold on to those gains ahead of earnings. So again, you're just looking to see, a potential, uh, move here, maybe around the 21-day line, or if it can gap up, investors can enter, on that gap.
Exactly.
All right, well, let's move on and take a look at Toll Brothers, which will report fiscal Q4 earnings on Tuesday, December 9th. Earnings for the home builder are expected to climb 5% to 488 per share, and revenue is projected to drop slightly by 1% to $3.3 billion. And here's why we're watching Toll Brothers. Can the company meet deliveries and average price guidance? And will it provide any guidance for 2026? We want to know if the bullish sentiment about pent up demand is going to continue. And Ed, I think a lot of investors will be looking at that guidance for home deliveries and average selling prices. I think it'll also be interesting to see how the company can navigate the luxury home market with all this economic uncertainty going around. But what's your take on Toll Brothers and why is it important to watch next week?
Yeah, I mean, it's one of the first ones that are in this little cycle. And with home builders, they do tend to move in packs because they're all building homes. I mean, so what Toll Brothers has to say will matter for a lot of other names, and those stocks have been coming up and setting up. So it's important. I want to see if they're going to actually get growth because it's not. If you can see over there, it's supposed to be flat for this is the fiscal Q4. Okay, so we know this year wasn't that good, but next year's not supposed to be that great either. So people are betting that maybe things will get better with lower interest rates, but we don't know. The Fed is cutting rates, but we don't know if the 10-year treasury yield will fall further. If the markets think that either economic growth or inflation will pick up, then you could see the 10-year yield rise. So it's not a guarantee that Fed cutting rates from this point will help. So we'll have to see. I mean, it depends on a lot of things. Uh, the luxury market should be more insulated, you'd think. A lot of other home builders, I think, had pretty big drops in earnings this year because the luxury market. I mean, look, the jobs, most of those folks have had jobs. Yeah, inflation's out there, but it's just pinching a little bit. It's not that the affordability issue is more like something to complain about at your wine tasting club, not really dire stuff. And stock market gains for those high end. So it's not the same as maybe other markets, but still relevant. So what they have to say about things is really important for that whole housing sector.
All right, Ed, and we're still on the daily chart here, and we can see that Toll Brothers has been setting up this pretty long cup with handle base, 149.79, the official buy point there. But again, we saw on November 25th this nice upside reversal, retaking the 21-day line and the 50-day moving average, also clearing some short-term levels here around the 140 area. So talk to me. Was this a potential early entry here, or what would you like to see set up as earnings approach?
Yeah, I think there was that early entries and moved to about 140, sort of like a little proto handle, wasn't long, and the handle within the handle. I almost think of that handle as its own base because I think of that low back in April as the start of the bottom and then a prior uptrend, and now we have this base. But however, it doesn't matter. It doesn't change the buy point. But there is that sort of handle within the handle or the short-term high at 140.82 kind of area, 141. Went over there, but I don't know. There's not much time. There's not much time. Earnings will be coming up and we're only talking about just so it's coming up on Tuesday, so not a lot of time to generate things there, so I would wait. And one way to play it is doing other things like ITB or XHB, some ETFs that are playing around in those things. ITB is more housing, like more home builder. XHB is home builder, but also a lot of other things like Home Depot and some housing housewares retailers in there too. So those look a lot. I mean, the thing is that you can see they look similar. They have that they've bounced, they've come up, they've got this little pause here. So, and the same kind of thing with ITB. So that would be another way to if you felt compelled to get into a housing thing, there might be an ETF rather than Toll Brothers. because if Toll Brothers tumbles, maybe ITB will not sell off in that same amount, but it would probably fall. I mean, in that instance.
And just looking at the fundamental picture, Ed, again, you talked about growth for this year essentially flat, expected to be down slightly next year. So anything else with fundamentals jumping out to you about Toll Brothers?
Yeah, I want to see how that is that going to turn around. They haven't given forecasts before. They didn't give it on the fiscal Q3. Well, it's the end of fiscal Q4, so presumably they'll give some guidance. And it's other things. It's not just mortgage rates. There's the labor costs, which partly related to immigration issues. There's maybe supplies. Some of those costs have gone up. Some of them have gone down. So there's a lot of different things that could influence the bottom line. But got to see those sales. You got to need to see those sales pick up if to get to really see this momentum continue.
All right. Well, let's go ahead and dive into Oracle, which is scheduled to report on Wednesday, December 10th. The tech company is expected to see fiscal Q2 earnings up 12% to 164 per share, and revenue is expected to rise 15% to $16.2 billion. And here's why we're watching Oracle. Is the company making money on the data centers that they're building? We'll also want to hear how management is addressing concerns about debt to finance for AI data centers to fulfill a huge backlog. And will that backlog be from OpenAI or others out there? Will that come true? And it's funny, Ed, because we saw a Broadcom jump on OpenAI news, but Oracle stock has been beaten down by concerns about AI spending and its reliance on OpenAI. So, what do you think can ease investor concerns here?
Yeah, I'm not sure it'll be because they sort of have to deliver, and that may be a maybe a year from now, people feel really better about how things are. Maybe they got to convince people, no, it's not going to be that big of a deal. That OpenAI is serious, and maybe they would say, well, even if OpenAI doesn't come through, we can sell all this other stuff. The financing costs aren't that high. Yeah, because it was people just looking at it like, because they might be on the hook for it. Whereas somebody like Broadcom and Nvidia, when they make these deals, they're going to sell a lot of chips. And whether the other companies, it's companies like Oracle that have to make money off of that. And there was a report, back in October or so, when the information I think said that yeah, they may not be making money on some of their existing stuff, especially their Blackwell chips. And I think Oracle refuted that. But let's be clear, the stock kept falling. So markets are concerned whether or not that specific information, like specifically, it's sort of like saying, no, I didn't lose $572,000. And it's like, no, well, as in truth, it was 600,000. It's like, I mean, so I don't know, but the market is concerned. And so it has to belay that. And so I think Oracle has some work to do on that thing, because they have that massive backlog. Can they deliver all that? And so yeah, and it's not going to be, won't be easy for you and I. It's like, it's like, oh, were they convincing? I don't know. This is definitely a situation where you have to let the market tell you. Yeah, I know the market convinced, because they're going to say stuff that'll sound convincing, sure. I mean, it's like, I don't know. But let the market tell you on that.
All right. Well, we're on the daily chart here, Ed, and what the market's telling us right now is, Oracle not looking so hot. It's roughly 40% off its 52-week high here of 345.72. And as you mentioned, it had that news back in October, and it has just drifted lower since, breaking below the 50-day line back here on October 29th, and now trading below the 200-day line, looking to retake that, but potentially hitting resistance there. So again, what are you looking in terms of technical action here with Oracle?
It needs a lot of work. It needs to get, I mean, look at all that volume from that gap update. Look at all that massive volume, not just then, but for basically months. There's a lot of people who bought stock, certainly for that first month or so. Maybe lately it's been more selling, but a lot of people bought this stock like at 275 to 345. They may want to get out. So you could see this one getting up and then falling. I mean, there's going to be a lot of people who might want to just get out with a small loss. Yeah, it needs to get above the 50-day line, but you can see how that 50-day line is really falling now. So it's one thing. It's usually better if you're crossing a 50-day line that's rising. So this is something, but that's not probably enough. I think this is a situation. If Oracle's great and everybody's cheered, I mean, maybe it's turned around, but I think that might be a more positive sign for other stocks, other AI stocks that are in better position. And a number of them are doing well. This one is just the RS ratings is 70, but actually, if you do the related information panel, And you can see the RS line's terrible. You go to technical right there on the bottom one, and there's the RS rating. There's the 3 month rating. That's a 7. Not 3 months ago. Down to RS 3 month. That's a 7 out of 99. So you can just see how it has really underperformed in the last few months. So there just seem to be a lot of other names, in this space, but it'll be relevant for all those other data center plays, basically everything. So very important report, but it probably isn't one that you want to be involved in this stock, not until it maybe rebounds and really sets up again and proves itself.
And I'm just switching over to the weekly here to get a better view. And again, at this 40-week moving average. But talk to me about the fundamentals, Ed, because again, it looks like EPS growth might be picking up here a little bit into the double digits, sales growth in those double digit range as well. But anything else that is jumping out to you?
Yeah, that's an important point. Growth is supposed to pick up, and that's something that was struggled for a long time. They just couldn't grow, couldn't grow, couldn't grow, not really get out of the single digit thing. And it looks like they're moving out of that. So there is that growth. It's just a matter of can they live up to the growth. You could see how much, it had gone from like 120 in April to 345. So it almost tripled over a few months. And it was just the hottest thing out there for a brief moment in time. Larry Ellison was the richest man in the world. This whole thing going on. So is it enough? It's nice to see that that's supposed to pick up. I mean, they have that enormous $500 billion backlog. So that bullish thesis could come back. It just seems like the chart needs repair time.
All right, Ed. Well, those were some of the top names on our radar, but there's a few more coming up. So let's start with AeroVironment, which is scheduled to report on December 9th. I'll switch back to the daily here. This is another one that's taking a little bit of a beating. It hit this 417.86 high. It has since pulled back, trading below the 50 and 21-day lines here, but still above the 200-day. So tell me your thoughts here.
Yeah, I mean, it needs to repair. This also has lumpy earnings. You can see some lumpy stuff going on there, not just even on earnings, but even on sales. I mean, it seems like there's some growth. There's definitely growth, over time, but it's just lumpy. It needs to do a lot of repair. It needs to get back above the 50-day line. But if it does it really rapidly, then it's made a huge move. It goes from 260 to 350 in a week. Well, what do you do there? So this needs time, I think. And it needs positive reaction, but then it needs time on top of that.
All right, how about we check in on Synopsys, which posts on December 10th. Again, this chip maker looks like it's trying to rebound after hitting some lows here around 376 and getting back above this downward sloping 50-day moving average, but the 200-day line still a bit a ways to go.
It's been rebounding recently because NVIDIA took a stake in this company, so that's obviously a good sign. This is a chip and electronics design firm, so very important things. It needs a lot of repair work, but again, this what it has to say will be important for chips.
And how about Adobe? Earnings there due on December 10th. And, this one had a big run, in 2022 into 2023. It's since lagged and has been in a downtrend. Again, it's trading below these key moving average, the 10 and the 40-week lines, Ed. But what's important about Adobe earnings coming up?
It's the earnings. They really need to get some sense. They got to convince investors that AI is not going to kill this business. And, that rally in 2023 partly was the market, but partly it's like, oh, they're going to do neat stuff with AI. And then it was just like, oh, maybe they'll just get crushed by AI. I mean, and that was a threat that hit Google for a long time. And then Google finally, no, Google's doing well. So I'm not saying it can't happen, but this one needs a lot of repair work. That is a big downtrend over the past couple of years. And honestly, it never even got to the highs from back in 2021. So it's been slumping for a long time. That RS line, I guess if you let's go to a monthly, because that is a really poor RS line. That is like the lowest probably in a decade or roughly. You can just sort of see a lot of, okay, like 8 or 9 years. That's just a long time. It needs a lot of work, I think, to convince people that no, they're gonna do fine. And that's, I think, the biggest thing that they need to do, and not, either now or in the future.
All right. Well, how about we keep going with Ollie's bargain outlets earnings there on December 9th. I'll switch back to the daily here, Ed. This one below the key moving averages here, but basing in consolidation with a 141.74 pivot point. But talk to me about the discount retailer and what you're hoping to hear on earnings.
There are discount retailers that are doing well, and there are discount retailers that are not in terms of stocks. And this one just isn't. It's not the worst. You could imagine that if it rebounded, got back, decisively above the 50-day line, maybe above 130, you could start thinking, oh, is it flashing some kind of buy signal? Just the RS line still seems pretty weak there. It's just I think I'd want even more. So I'd like to see it rebound. It could rebound and it could start looking interesting. I'm not sure that it would be like really high up on my list, but I could think it'd look at interesting again if it made a really good move. But and I think that 100 is a fake trade. So this is basically, so I don't think that was real. So 115 is probably where the lowest it got. So it's basically at the lows here, of that thing. So it needs to turn around. The story, the growth story is fine. You look at the numbers seem fine so far. So some acceleration there, but the stock is not doing well.
Or how about we look at Sienna, due on December 11th, Ed? And again, this one makes like Ethernet infrastructure type equipment. This one looking pretty good here, Ed. It had this nice gap up from last earnings. Rose about 24%. It went on a really nice run, tested the 50-day line back on November 21st and rebounded, and it's now just above the 21-day line. So, how do you catch this one if it makes a move?
Yeah, I mean, I suppose you could use the high from a couple days ago, like like around I don't know 205 or whatever, yeah,
209.
209, maybe a sort of a entry within a short consolidation. It's already pretty high, and it would already be getting a fair amount from the 21-day line at that point. It's already pretty much extended from the 50-day, so you just have to know that. I mean, this is one that's become an AI play, and you can look over to the side. This is one that just would seem to be lumpy, like in 2020 295, EPS, then sort of flat 291, then it was down 190. I get then up to 272, then down to 182, and now finally it looks like it's going to have a couple of good years in a row. And this AI is just that demand. So I think that's something is that because this would do things, it'd be teasing, and then it's like then it would just roll over. It just would always seem to not work. Now it seems to finally be catching fire, which it hadn't been doing for quite a while.
All right. Well, how about we take a look at a new IPO, a billion to one, the biotech reporting on December 9th. And Ed, this one, again, it broke out of this IPO base. That was a 123.84 level. It's pulled back pretty sharply, but it's still trading above this IPO listing price of 60. So, what interests you about billion to one, and what perhaps could maybe tighten up here in terms of the technical action heading into earnings?
Yeah, obviously, just leave it alone right now, and I think you just need to see it set up again. It's a profitable IPO. It has decent sales. It's not gigantic, but this is not like it's getting to be solid sales there. So seems to be shifting to profitability. We'll see. This is the first earnings report. You just don't know how first earnings it can be crazy, but there's definitely some of these areas of cancer detection, kind of things. That's an interesting field, and some of those stocks have done well. We'll just see, but
Mhm.
I don't think this is probably something probably needs to set up again, and I don't know where that is. And sometimes you have to look and squint for a buy point. I don't really see anything like that now. Where you might do something, but one to watch as in 2026, perhaps. But maybe after next week, we can just forget about it
Well,
and
we'll
never
see.
look
But
at it
yeah,
again.
biotech has been an area of strength here in the market, especially this year. But why don't we wrap up with Micron Technologies? Now, the earnings there aren't due until December 17th. But, this one, another good one that investors should have on their radar. And again, we had shares hitting this high of 260.58, pulling back, testing the 50-day line, and now trying to get above the 21-day moving average.
Yeah, and look in hindsight, yeah, buying off the 50-day line would have been a great opportunity. But man, take a look at the weekly. You can see that would have been a scary. I mean,
Mm.
you would have been buying at just an enormous drop, It's like you didn't know, and it was going under. It went under the 50. It looked, you just didn't know. There's enormous demand for memory chips, but the expectations will be high. So we'll see. We'll see. I mean, these stocks have gone up tremendously. The growth outlook is supposed to be very strong. Going for it's in 2026 now, but they're starting it. So really powerful. This is a stock. The memory space is one that can have enormous moves, enormous dumps. It's maybe super turbocharged by the AI space. Maybe it pauses for if it can pause for a week or so, like maybe this week's high, the early December high, from this, yeah, right there, that could be some kind of
Right,
quasi
244.
early entry, not a handle. It's going to be too short, but you'd like to see it tighten up, and we'll just have to see how the market does. If the market surges, well, this probably isn't going to wait. If the market tanks, this is probably going to sell off as well. But yeah, maybe that would provide an entry. It's definitely one of the biggest winners of the year.
All right. Well, we'll be keeping an eye on that 244 level. But Ed, thank you so much for your insights today. And that wraps it up for this season of Earnings Cheat Sheet. And as always, if you want more market analysis, you can tune into Stock Market Today. That goes live after the closing bell. We hope all of you and your families have a wonderful holiday season. And we'll see you next time earnings roll around. Have a good one.